The AI trade is selling off. The US and Iran traded fire over the weekend, and oil is nearing $80. Plus, 4 more stories moving the tape. Let's get into it. Wall Street opened the week hard risk-off. Nasdaq 100 futures fell as much as 1%. Brent crude pushed toward $80 a barrel, and chips led the downside after the US renewed strikes near the Strait of Hormuz over the weekend, and Iran retaliated against Gulf allies, including Kuwait, Jordan, and Qatar. Tehran's Revolutionary Guard declared the strait closed until further notice. Here's why it matters. An oil and geopolitics shock lands squarely on the most crowded, highest beta corner of the market, the AI and chip complex, right as earnings season begins. The bear case is structural. This is a richly valued, heavily owned trade with no macro cushion, and it sells off first when risk appetite turns. The forward signal. Watch Brent. Hold above 80 and rate-sensitive chips stay pressured into Thursday's TSMC print, the single most important AI read of the week. Reopen the strait, and this dip gets bought fast. Apple just declared open legal war on OpenAI. It filed suit in the Northern District of California, accusing OpenAI of stealing hardware trade secrets, quote, at every level, from technical staff up to its chief hardware officer, ex-Apple VP Tang Tan. The complaint says departing employees were coached to bring actual Apple parts to interviews for show and tell, and cites more than 400 former Apple staff now at OpenAI, which is building consumer devices off its $6.4 billion buyout of Jony Ives I.O. This is a stunning reversal from the 2024 deal that put ChatGPT inside the iPhone. The bear case for OpenAI. This is a direct legal overhang on its device ambitions. An injunction could freeze the roadmap. The forward signal. Watch for Apple to seek a preliminary injunction. If the court bites, OpenAI's hardware timeline slips, and the AI hardware land grab tilts back toward Cupertino. Here's the counterweight to the sell-off. The Commerce Department reclassified the UAE to Country Group A5, the first Arab nation to earn the Trusted Ally tier. Effective July 10th, permitting license-free exports of advanced AI chips to approved buyers like G42 and Core 42. For AMD and NVIDIA, this cracks open a capital-rich sovereign AI market that licensing friction had throttled for years. It's a concrete demand catalyst, landing the same day the broader tape sells off on Iran, the bull and bear case for chips arriving in the same news cycle. The bear case here, a trusted ally designation, is a policy choice, and policy reverses. Any sign chips get rerouted or Gulf security deteriorates could snap the door shut. The forward signal. Watch for the first large G42 or Core 42 order. Confirmed sovereign demand at scale is exactly the offset chip bulls need against the macro shock. NVIDIA reclaimed the $5 trillion market cap on Friday, rising about 2.3% as semiconductors broadly outran the AI software names they supply. With a 7.5% weight in the S&P 500, NVIDIA doesn't just ride the index, it moves it. That's the double edge. The bear case. The same weight that powered Friday's rally makes NVIDIA the single biggest drag on Monday's risk-off open. Highest beta, most crowded, first to sell when oil spikes. The UAE opening we just covered is an incremental positive. The Iran shock is the immediate headwind, and NVIDIA sits at the center of both. The forward signal is Thursday. TSMC, the sole maker of NVIDIA's leading-edge silicon, reports with consensus at plus 32% revenue growth, and every word on AI capex flows straight into NVIDIA. Also still live. China H200 licenses at a 50% volume cap, with Beijing weighing roughly 200,000 chips. SK Hynix completes its U.S. arrival today, after a 13% Nasdaq debut. Friday, closing at $168 versus a $149 ADR price on a record $26.5 billion raise, the largest ADR offering in market history, bigger than Alibaba's 20 debut. The WEN issued ticker converts to permanent SKUU today and leveraged single-stock ETFs SKHY and SKDD launch. That gives U.S. investors direct and geared exposure to the pure-play maker of the high-bandwidth memory inside nearly every AI accelerator. The chairman told CNBC demand is enormous. The bear case, those leveraged ETFs cut both ways, and memory is a famously cyclical business debuting into a tape wobbling on Iran. The forward signal, HBM pricing, and Thursday's TSMC CapEx commentary is the tell. If scarcity holds, SK Hynix is the cleanest way to play the memory bottleneck. If AI CapEx blinks, the geared ETFs magnify the pain. The through line today, one oil shock is stress testing the most crowded trade on Wall Street, even as Washington opens the Gulf to American chips and Apple drags OpenAI into court. Thursday's TSMC print settles the argument. If this helped, subscribe to the Daily Alpha. We'll see you tomorrow.